Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our four agreements. To begin a great relationship, know what you want. Know what the needs of your body are, what the needs of your mind are, and what fits well with you. There are millions of men and women. Some of them will make a good match for you and others won't. The key is that the two of you only need to be like a key and a lock, a match that works. Market-wise, let's take a look at it out here. We had the Dow Industrials down 68, NASDAQ off 4.5, S&P's down 8, gold contract down $21.50, trading at $1,225 an ounce. Silver off 44 cents at $19.38 an ounce. Platinum down $8 at $1,362 an ounce. Copper down 3 pennies at $3.21 a pound. Light sweet crude flat at $97.33 a barrel. Bonds down 6 ticks at 130.14. King dollar down 358 ticks, trading out at 80.27. The yen was up 77 at 136, and the euro and the yen. That was the euro, rather. The yen, folks, is down 64 at 101.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? It's a slow roll, baby. So, you're down $8 out here. What we have, however, is you have this small swing point that the market wants to get down and go after. So what we did out here today, we only did 540 million. Let me see if we did any more right 5 minutes after. Yeah, no, there you go. Someone fed it. Oh my God. So check this out, folks. Yeah, someone just fed 120 million into the into the close. Okay, so we did 700 million. Bottom line, you did 700 million. What you have is this. We're at 1784. That small swing that it's going after is 1777. I suspect you're going to get it. The jobs number's coming out in the morning, folks. Okay, the bottom line, it's going to be a good jobs number. We'll see. My take, of course, is that with the good jobs number, the market's still going to go down. Yeah, that's just the way it's set up right now. We go over and we take a look at the Dow Industrials. What we have with the Dow is this. She was down 68 today. Not a big deal. What is a big deal is that she's getting really close, though, to getting inside the lower range. So we are at 15,821. The range, the lower range, starts at 15,709. So you got, 114 points. And that's nothing. You get in that range, whole different ballgame, folks, because that would set up that you're going to run down to 14,500. And that, that in itself would be, when you're listening to the financial press right now, they're freaking out about being down 4 days. The market really has gone sideways, when I look at the market, really, it's like, this is not even a pullback, This is a sideways move. NASDAQ, we take a look at the NASDAQ. What do you have with the NASDAQ down $4? NASDAQ is definitely a sideways move. What you do have in the NASDAQ, however, is that the NASDAQ is pounding some volume. And that volume indicates that, guess what? Tomorrow, we're going to have some really heavy volatility, more than likely before the job numbers come out, when the job numbers come out, and I suspect within a couple hours after that. We had the volatility was in the market again today. We'll go through Europe, but Europe, the DAX is in bad shape, and the DAX mimics the NASDAQ. Gold contract. Now, this is going to be really cool. So gold, folks. What did gold do? So the gold contract today had a price spread. Well, first off, I want to go back 3 days ago. So 3 days ago, what we have is this. The actual physical metal got into a price point of $12.14. That was 3 days ago. The low that it was testing is the low of June 28th. That low there is 11.87. Okay, so get in there, had dramatically lighter volume by 66%. Need a sign of strength. Guess what? You got that sign of strength yesterday. You had the wide price spread. You had the accelerated volume. You had all of the above. Yesterday, we go topside. We do it with 182,000 contracts. Now what happened to the gold market today? Well, this would happen. Barrick, who we know is the big dog on the street, has a new CEO. Now, this new CEO he was the co-CEO of Goldman Sachs Group, okay? So that's where he comes from. You're going to love this history. This history is really cool, man. It's a trip. And it just absolutely correlates with the banking structures, period. So yesterday, the guy's name's Thornton. He had been the president. He was the co-CEO with Peter Monk, who had started it. Well, come the first board meeting in 2014, it's just him. They get new directors, the whole ball of wax. So what happened is that last night he was making a speech, and inside his speech, the first thing that he brought up. Now, this is that Barrick and all the other gold companies, folks, had lost a fortune hedging gold. Barrick lost $5.6 billion when they closed their hedge in 2009. In fact, let me see this. I want to see something for a second, because this is pretty funny. When Newmont actually closed theirs almost at the high. It was pretty close to the high. But let's see where Barrick. So 2009. Let's go to 2000. Nah, that's still good. Thank God they closed it. Yeah. So it was still at 12.27. They closed it somewhere around $1,000. Bottom line is this: what he came out with is that he can't understand why gold companies are not hedging. That's what he came out with. Okay. So the gold contract goes south so quick you couldn't see straight when this is happening. Bottom line, folks, is that it looks to me that this bottom is still in, and I love it when something like this happens. And this is why. We know what the price of gold is out of the ground, $11.50, $11.70. You're at $12.25. If you do get the gold report, you know that the last 6 months, I was, saying 2 or 3 different times in there, it was just a matter of when hedging was going to start. It absolutely, these guys are out of their mind. They should have hedged when gold was at 17, 18, 1900. Why wouldn't you? Okay? And this is going to be the most bizarre part. If they're going to be that crazy to hedge at these lower prices, then yeah, they're going to blow up again. Does it put more supply on the marketplace? Yeah, it's going to put some more supply on the marketplace. Is it going to be a rerun of the last time that they all started hedging? I don't think so. So what happened the last time when they all started hedging, they were pushing, selling forward, and the price kept dropping. I just don't, the correlation just isn't there at this particular point. The reason being is that it costs so much to get gold out of the ground. Technically, the way that gold pulled back today was perfect. Bonds. Let's go over to the bond market. TYZ 3. So 10-year bond out here, this is what we have. 10-year is at 125.22, and oh man, this is a trip. Okay, so yeah, no, we're at 125.22. Now 125. Oh man. Okay, so it was going into where it had gone topside from on October 16th. That number is 125.16. It goes down to 125.16. Basically, it comes up a little above it. Bonds are going to need some juice to the upside. I suspect that you are going to get it, though, because there's not a breakdown in bonds. We're running at 2.8 in the bond market. Now, let's go to King Dollar, because what we do have is that King Dollar, yeah, this is going to be interesting. Okay, so it's getting clear right now. So what King Dollar did today is she goes south, and she went south with volume picking up. Okay, so now this is what this does, because we knew that we had divergence between the dollar going up and bonds going up. And then gold going up. So this move here and the dollar today is saying, hey, guess what? What we just did, amazing. Okay, so we got under where the C point was, which is 80.52. That's where it took the B point out with volume. We get under that. We get an expansion with volume. That sets up that, guess what? You're going to try to run down to the bottom of that swing. So in that context, so watch, which is really cool here. In the context that we had King Dollar go down 358 and gold go down, my take is that, yeah, the dollar is probably going to go after that lower swing. We'll see what happens at that point, but gold wants to go higher. Our phone number is 877-927-6648, ULTA. ULTA, they're in of course, the grooming business, and they are getting a haircut extraordinaire. So UTLA had closed at $118. That was already down for the day $5. And if you want to see a classic, okay, this is absolutely a classic, folks. Meaning, let's bring this back. So if you're watching Tiger TV, you can see the whole deal, how it shakes out. And what it is, UTLA started out March of 2013 at $75. Has one two gaps. After the gap at 118, no volume whatsoever at the very highs. You stay right there. We'll come right back. We'll finish it up. We'll be right back.